The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start the show as I usually try to do. We're going to look at the German DAX, and it's very important that we look at that because that's where the whole rally started. Late Thursday, basically related to the Deutsche Bank stock. What we're looking at now is just a half-hour chart. You can see after we made that ABCD pattern, we had a tremendous move. We rallied over 500 pips. That's $12,500, folks, in dollar amounts. That would be equivalent to over 150. Yeah, it'd be about 150. S&P handle. So this is the strength of what's happening. Now, if we take a look at the daily chart of the DAX, and we did this, of course, on Friday, the exact low that we made on Friday in the DAX was a perfect 38% retracement. And as you can see, there was also a perfect ABCD pattern at that point. That is a very, very bullish pattern. What we've done now is we've got almost up to the 10,600 level. We're not quite there yet, but we are close. Now, the reason for this, of course, is because of the Deutsche Bank stock. And if you'll give me just 1 second here, I will bring it up so we can take a look at this. You'll notice that, here we go. Give me a second. There we are. And we're going to have a guest at 9:30. Hema Reddy is a specialist with WD Gann, and I thought you might be interested in what she has to show with us, and we'll see. By the way, the first picture that I posted into Tiger TV today is a picture of two of my dearest friends in the whole world, Jim Twentyman on the left, and my other friend, Mr. Zaki from UK. They're over there discussing the markets and astrology and stuff, and they took a day off to go see Stonehenge. Thought you might like to take a look at it. Stonehenge is right in the middle of the freeway, folks. It's not out in any real special area. There's the freeway splits over there in the UK, and right in the middle of that freeway, it looks like a rest stop, is this incredible edifice called Stonehenge. Anyway, if you'll notice that we did hit that 1.618 expansion to the exact tick. Well, I think I missed it by 2 pennies on the DAX, but no, on the Deutsche Bank. And now we've had a 14% rally. Remember, it was down over 25% on the week, and we rallied 14% back. 14 and 25 is exactly 0.618. So there should be a lot of resistance at around $14 a share. Now, if this stock should get above $16 a share, Deutsche Bank is not anywhere near as big a problem as people might think it is. This is the same kind of thing that was happening with Lehman Brothers back in 2008, folks. We had some pretty good rallies in Lehman Brothers when it looked like they were going to be bailed out or taken over by Goldman Sachs, all of that stuff. But until that happens, you can't really believe anything. Well, you shouldn't believe anything you hear anyway. But watch the charts. This was not an unexpected rally. It did move, quite a bit, but really nothing really different is happening. Now we've got a situation in two of the things that we follow all the time. That is gold and silver. Let's just do the gold first because that's the bigger market between gold and silver. It's many times larger. But if we take a look here at the gold market over the past year, as you can see, last December we made that bottom where we had been down 37 days and we rallied $150 an ounce. And then from July to August, we were down 37 days, stopping right at a 38% retracement. We still have not broken that to the downside. However, folks, we are very, very close to breaking this to the downside. Anything under 1309 is going to trigger what I believe is going to be a really nasty move. And the reason for that is the fact that after we had the 37 days down, you see we had a tremendous rally up into 0.5, which was the 135 pattern. That was exactly, 78% retracement of 0.3. Then we came down and we rallied up early last week to the exact 78% retracement at 1344, and then down again. The reason why this is important from a cycle perspective is, if you'll notice, back in December, when we had that, you'll notice how the market came down and tested it 3 times. That's exactly what we're doing right now. So if it doesn't hold this test and we get below 1309, this is telling us that we're ready to go to the downside. Now, all it takes to get this thing moving is a move above 1344, and I'm going to say that this is something that I really look at, but it certainly looks like it really wants to fail. It's making new lows as we speak. We're trading around 13.15 right now. So I would say that this would be something that I would be really skeptical on the long side if we get below 1309. So we'll watch it, but that's what it looks like. Remember, we had that beautiful head and shoulders pattern in silver that worked incredibly well, and then after that, of course, the market just gave it back up really quickly, and we're trading down near that $19 per barrel level and per ounce level. It's too early in the morning. What are you talking about? I don't have any mornings. All I have is extended nights. You'll notice we had that beautiful head and shoulders pattern on the hourly chart that we talked about here last Friday, and then we had a tremendous move. It rallied over 60 cents an ounce, and now we've given it all back. The market's just not reacting well off of that cycle, off of 37 down days. It should have really exploded to the upside, and we haven't done that as of yet. So any breakdown here could really bring some, a lot of selling into gold and to silver. So, just keep in mind that even though long term we're very, very bullish, we could easily see a move down to $17.40 an ounce in the silver market, and we could get as low as $1,200 or $1,175 in the gold, and those would just be normal corrections, because we were up 7.5 months, and now we're down about 4 months. So that's just normal technical stuff, because when markets don't react to the upside like they're supposed to, there's only one other place they can go, and that is to the downside. So this is why I think you have to be really skeptical here of the long side in both gold and silver. If you're a buyer here, your line in the sand, I believe, is 1309 in the gold and 1880 in the silver. Anything below that, I don't think would be a good thing, to watch. So that's one of the things that we want to watch very, very closely. Now, if you'll remember, on Friday last week, we were talking about another market that we really liked, and that's where get into the old farming business, and that was the corn market. And this was an interesting one because we went right down to the 325 per bushel level. We actually stayed there for darn near an hour. And then the report came out. It's a USDA report, but it's not one of the really large ones. But as you can see, there was the corn output was not nearly as much as thought, and so the market rallied quite a bit. We'll be right back. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed With TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at the British pound right now. Regarding the corn that we talked about, if you bought that corn yesterday near that 325, let's say the Friday, 325 per bushel level, move your stop up to 329 to protect a $200 profit no matter what happens. We're trading around 338 right now, which is, that's up about $650, which is no small piece of change. So if you're inclined, you could also take some profits there if you like. But I would suggest you just put your stop at the 329 level and just see if it's got a chance to make the larger ABCD, which would be up another 20 cents. You're in a risk-free trade now, which is the ideal place to be. Don't watch the machine. Just put the order in and let her rip and see how it all turns out. Okay, let's switch over now to the currency markets. By the way, this week, October 7th, this Friday is a very, very important day in foreign exchange. This is the day when the SDR, special drawing rights, have brought in the Chinese renminbi, the yuan, and it'll be given a weight of about 11%. That takes it away from the U.S. dollar, which will go from 53% down to, I believe, 44% of the value of the U.S. dollar, of the U.S. dollar index. So there will be some changes made. How much of a factor it's going to be, I don't know. I have never really traded the renminbi yet. I've done some longer-term things, but never on a trading pattern basis. I did some work for a Chinese bank many years ago, helped them do some hedging, but that's when it was 12 to 1 at that time, and now it's 6-1. So anyway, let's just watch what happens here next week. But we'll talk a little bit more about that in the newsletter this coming week, because this is going to be very important, I believe, because you're talking about the second largest economy in the world, which will soon be the first largest economy in the world. And we want to watch this, very, very closely. Okay, now if we take a look at the next one that we were watching this week, which is very important, this is the British pound. As you can see, we have a potential triple bottom in here. What we've done now is we've taken out both of those bottoms this morning. I mentioned in the newsletter over the weekend that the level to watch in the British pound was 128.40, and so far the low today in the British pound has been 128.34. We're trading at 128.52 right now. And that is a very, very, very important number. I don't believe we're going to get below 128 on this move down, but I certainly could be wrong. If we look at the longer-term time frame, which I don't have the monthly chart that was given to us by our good friend Jim Bartolioni of V50 Capital Partners, and if that level is correct, and we've talked about this in the past several weeks ago, that this level of 128 is going to be very important, going all the way back to the 1985 Plaza Accord when the pound was trading at 105. So the Brexit thing is in play, so whether it's going to affect the market too much over there, we'll have to wait and see. They're certainly going to make it through, just like all of us do through all of these things that are going on. But that's neither here nor there. But we want to watch this currency very, very closely. Another one second, please. Another one that we mentioned last week that is affected by all of us, of course, is the yen, the Japanese yen versus the U.S. dollar. And here again, you see that we've made a relatively important bottom with this 135 pattern that occurred since last June. We had a beautiful Gartley pattern here middle of last week at that par level. We got to par 008, and now we're trading at 101.32. If we can get above the 102.50 level into this, we would have a chance for a pretty good rally. Now, if you'll notice in this chart that we've had lower tops and lower bottoms ever since, well, it goes back farther than May, but this is the easiest way to look at it over the last 6 months. But you'll notice that the ranges are tightening up now, which is another sign there could be some really good support coming in here. We're seeing it in the charts, but remember, this support can fail, and then you head to the downside. So below 100 really is not a very good sign in the dollar yen, but above 103 is relatively bullish. Because that would break this long-term cycle, i.e. trend line, that has been here for quite some time, and that would give you a chance to see this market move to the upside. But that's right now we're in this very, very tight trading range, and that's the important thing to watch. I wanted to just give you a quick, this is my 2 cents worth, folks, and that's, believe me, what it is. You get what you pay for, so 2 cents may be overcharging you, but we'll take a look at this. This is the really the important chart from my perspective, looking at cycles. If you'll notice there on around the 25th of July, that we had 5 major cycles coming together, i.e. these ratios, 618, 786, 1.27, and two 1.618 numbers coming together, all at the exact same price. This is a very bearish pattern. However, on the downside, you'll see that it stopped at perfect 135 patterns, exactly at 61% retracement and 78% retracements. And since the 15th of August, we have basically been in a very, very tight trading range. Something is going to make this thing move out of here. I don't know if it's going to be the SDR inclusion of the Chinese renminbi into the dollar index or not, but that'll happen on the 7th. That'll be, I believe, should be on Friday, or is it Saturday? Yeah, it's Friday, is the inclusion of the Chinese renminbi, which is actually a good thing because they'll be able to, watch the currency rates a little bit easier and gives them more flexibility too. But this chart has a potential to be incredibly, incredibly bearish. Now, we haven't broken much from that high. We went from 97 down to 94, and we've been in this really tight trading range between 97 and 94. Any breakout in either direction of this is going to be very, very significant, folks. It's just got so much there that you just can't imagine. As you can see, just since August, I put those little trend lines in. You see each of those trend lines. The first one was a 78% retracement. The second one was a 61% retracement. And we're just sitting there, doing nothing. And so something big is getting ready to happen in that U.S. dollar index. So we'll see what's going to occur. Now you're hearing a lot of things in the news about all the stuff that's going on. Folks, I wouldn't believe anything that's in the news. I am getting so skeptical in my old age that it's just really amazing how these people are spin doctors. I had a phone call from one of our listeners here at TFNN who remained, I don't know who he is, but he called and he told me what was going to happen over the weekend regarding some election stuff with Trump and the taxes. This was 2 days before it happened, and he said this is what was going to be said, and it was exactly straight. Unbelievable. But anyway, that's what's looking. We're going to have a break here pretty soon, and we're going to have Hema Reddy come on to talk to us about the WD-GAN. So we'll take a break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have a young lady that's going to talk to us about her work with WD GAN. She has a service called Skinny on the E-Mini. God, I love that handle. Hema Redding, how are you?
Hi, good, Larry. How are you?
I'm very good. You're ready to go? We've got your
Yes, I
first
am.
chart posted here. Why don't you, first of all, before we get started here, I know you went to school at Indiana University, and I know you got interested in trading and stuff through your father. But what brought you to the work of WD GAN?
Well, it was actually my first introduction to the markets and to technical analysis. I came upon my dad trading using technical analysis when I went to ask him for homework help as a teenager. And I asked him, what are you doing? What is this crazy chart with all these lines? And he told me about using math and probability and the work of GAN. And he handed me, when I was 16 years old, the GAN commodities book, How to Make Profits Trading in Commodities, and said, here, read this. And as you might imagine, that was a little bit overwhelming, but that was my first start into GAN's work.
Okay, that's good. Now, I think the first chart that we have in here today is from, is it Apple? Is the first one that we're looking at? Okay, why don't we go ahead and talk about that and what you're looking at?
Sure. So this Apple chart that I shared is the most up-to-date version of the chart of the week that I sent out back on September 15th. So as you may recall, that's when Apple broke above a key high from the spring. And after having such a big decline and obviously being such an important stock in the overall market, given its market cap size, I figured whether somebody's trading Apple or not, this is an important stock to watch. So the break above the high was significant because it set you up for one of GAN's primary signals in order to be able to now take advantage of a bigger picture long position. But obviously there's a little bit of consolidation that's been going on, and you see all of this sideways churning around that blue dashed line, which was the old top, as GAN would say. But using a couple of different GAN analysis techniques, including eighths retracements. So, Larry, I know you're a total Fibonacci guy, you, Carolyn, and most of the world.
Cool.
And I use Fibonacci's too. But after I got deep into GAN's work, I realized that if I'm going to use GAN concepts, I should use GAN levels, which would be eighths. And when you look at the zone here, that blue zone where I put the word sweet spot for a secondary reaction, that is the zone that I think would be optimal for this market to correct back to and set you up for the bigger picture swing to the upside. And that's what's going on with this chart. Now, the vertical lines, the yellow lines, are a cycle that I uncovered. And this is a roughly 120-day cycle observation. Now, the biggest question I get from people who read my work is, well, how'd you get up with that? And that's not easily answered over a 2-minute conversation or even a series of emails. I'm working on putting together a course where I teach people how I learned to do this in combination with GAN's traditional methods as well as my use of modern technical analysis. So the 120-day cycle suggests that the next key date for Apple is around December 3rd of this year. And that's just a point to monitor at which you may get a reversal in the trend or you may get an acceleration. That's another important thing that can happen at cycle time points.
Okay. Now, I think the next one we have is the crude oil. Is that correct?
The next one, well, we can go to crude oil, sure. That was the most recent chart that I did. And let me jump to it on my page here.
The folks in the den have a really strong interest in the crude oil market. Many of the traders here do a lot of trading in crude, so they'll be interested in your thoughts.
All right, sure. So last week, obviously, stating the obvious here, we've got OPEC finally coming around and saying that they're going to cut output. And once that happened last Wednesday, people got a little bit more excited about oil than they had been, and there was that pretty good-sized green candle. And then Thursday and Friday were a bit slower, but still to the upside. A few key observations here. First, starting with just the price action. I want to bring your attention to the two orange trend lines. So the traditional world of technical analysis says, you have to draw a trend line from a first point to a second point, and then you have to have a third point touch and confirm it. I know that this is the outlook because working as an analyst at an investment bank and working as an analyst at an independent firm, I was always yelled at basically because my trend lines were, in their mind, too early, too aggressive. But one concept that I've come to use quite often is that of a projected trend line, that the anchor here, so the February low, which was, people thinking, oh, that's it, and oil's going to go to $30 or $20, that entire price range of that February low marks a key zone of support when projected out and to the right. So the upper orange trend line is a support that is literally a parallel of the more traditional trend line that's actually on the lows. And as you can see, before we got the news from OPEC, before we got the break above the declining trend line, you had support at the projected trend line. Price didn't come back down to the original trend line. And some people would have then thought, oh, well, it's got more room to go to the downside. But I was able to anticipate that, wait a minute, we are at the entire zone of support, and this happened at a key time level, as you can see with the yellow vertical lines here. On my oil chart, these yellow lines mark a 48-day calendar time cycle. Again, uncovered using a combination of Gann's look at old tops and old bottoms and swing moves in conjunction with my other applications of technical analysis. So that was the first sign that this could be pretty significant.
Did you use any of Gann's, work in astrology? Because I know a bunch of his charts used to have markings for Jupiter and Mars and Mercury and Venus on those. Did you ever do any of that with Gann's work?
In that realm, I'm still a beginner, to be honest.
We all are.
All right. Well, anybody calls me a Gann expert, I kind of I shudder a little bit because Gann's work is so diverse, and there's a clear line between his trading methods and his forecasting methods. And I'll accept that title when it comes to his trading methods and how he actually acted on his forecasts. But in the forecast realm, I'm still getting my head around a lot of things. So I'm learning about the different symbols and the planetary lines, but I did not use those to uncover this cycle. What I did to uncover this cycle, again, once I'm at the point where I can teach this to people in a really clear way, will probably seem kind of simple, but it's true and it works.
Well, he certainly wrote enough material to fill up two Allied moving vans. I remember when Billy Jones and Nicky Jones bought all the Lambert Gann stuff way back in, I think it was 1980. I think it was 1980 when they bought all that stuff. But anyway, it was really good. Now, you want to go on? Well, what we have to do now, Hema, is we've got to do a commercial, but the folks can reach you at www.hemaready.com, correct?
Sure, that's my website, and my email is hema@hemaready.com. Easy enough.
Okay, well, we're going to post those into the room, and then when the break comes, I'm going to put up the chart of Google, which has your website on it, and so that'll be a big help. So as soon as the music starts, we're going to have to pay a few bills, and then you'll be back. Here we go. We'll be back in just a few minutes.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we're talking with Hema Reddy out of Buffalo, New York. Skinny on the E-mini, and we're looking at the crude oil chart. So you want to continue on with that one?
Yes, Larry had they say a picture is worth 1,000 words. Well, I feel like this chart of oil is definitely living up to that. So if it's all right with you, I wanted to make a couple timing points about it.
Please do. This is what the folks like to see.
Okay, great. So looking at the price action, just to recap quick, we held support at the projected upper trend line. We're breaking above the declining trend line, the obvious looming black line here. That's capped price action since the summer. But we've got a bunch of different colors of vertical lines going on. So if you were listening close on the Apple chart, I said that yellow lines show the time points in the cycles I uncover, and that's still the case here. But what's really interesting is that coming up in the future, there's a yellow line that's hugging really close to a vertical blue line. And these are two completely separate timing points converging upon each other down to a Friday and a Monday. So if you can get closer than a Friday to Monday timing point, I would love to know how. But coming back to how I came up with those, the yellow goes back to the 48-day cycle line covered. But the blue line is the cross, the intersection of the trend line resistance, the black line, and the projected trend line support. So not the original lower trend line between two lows, but the second higher orange line that is projected of the entire range. So you've got November 4th to November 7th of this year, which obviously is not that far away, as a key time zone. And as I also mentioned with the Apple chart, people have a natural tendency to want to pick a top or a bottom. Obviously, that can make for a great trade, and it also can feed your ego, frankly. But time cycles aren't just about calling highs and lows. They are about anticipating pickups in the trend. So in this chart, when you look at the three purple lines earlier on, back before we got into 2016, there was one in the summer of 2015, in about mid-July, where it was a time point in the 48-day cycle where you broke down from a consolidation range. So this was a continuation of the prior downtrend. Move out a couple months, and the same thing. It was about mid-October, early November of 2015. It was a very small price area, but there was consolidation, and on the time day, you broke down further, continuing the prior trend. And of course, you can see how this happened in early December, the third of the purple lines, where there was a clear downward momentum in place. And the beauty of this is what GAN is all about. In this third purple line in December of 2015, not only were you at a key time point, but price also broke below an old bottom, which is clearly labeled here from August 24th of 2015. When time meets price, beautiful things happen. And when you go to use the square of 9, or you go to use any of GAN's more complex methods, they are all about time meeting price and how those are focal points of, frankly, energy in the market. So here, you were still in a downtrend. This did not call a market low. But man, if you knew that that was a key time day and you were at a key price, I'm sure anybody would have been happy to capitalize on the extended short move here from December down into February. And so those are a few key things that I wanted to point out about the time aspect of this oil chart. And I think it's at a really interesting juncture. And if it's interesting enough as we approach those November 4th to 7th timeframe, I'll probably update the chart again and let people know what is likely. Is it going to likely be calling a market reversal point in that time window, or is it going to be a continuation of some other momentum showing itself?
Makes great sense, technically for sure. Now, the folks can reach you at www.himaready.com, correct?
Sure, that's my website, is my name. But to email me, which you can do anytime, is hima@himaready.com. Try to make it as clear as possible.
That's certainly good. Now, has it started snowing in Buffalo yet?
No, actually, we're lucky. It's unseasonably warm, and not quite like Arizona. You're probably all still in your flip-flops, but...
Oh, no, we've had some wonderful weather here. It's about in the 80s now. This is our best time of the year. Now, we're going to come up to another break. So we want to wind this up now. Let's do the last chart that you had, which is the Google. And we'll take a look at that one, too, if we could.
Sure. So should I start now, or?
Yes, go right ahead. It's all ready to go.
Sure. So with the Google chart, here's a situation where, and I think it's important for anybody who puts their research out in the world, is to take accountability for when they say something exciting might happen and it doesn't quite unfold, but the chart is still useful. And this is a perfect example of that. So it was on September 22nd that I put this chart out of Google, and obviously that was when this chart broke to new highs. And it had been consolidating for some time. You put a new major high, compared to all of the history of this ticker. And as per the concepts in Gan's work, which are repeated in my book and broken down a little more sideways, if this was to turn into a runaway move, speeding upwards, you really want to keep your stops tight on that. 2 sessions max, so 2 days, 2 weeks, whatever time frame you're trading in. And I was just thinking that was going to happen here. I mean, this thing was ready to rock. But it didn't. It's not falling out of bed, but we obviously have been consolidating and are now hanging around the intersection of the consolidation resistance and the trendline support. So again, still room for something interesting to happen. But what is of note is that the $817 level is a support that I put out there on September 22nd, and it's still held all this consolidation. So for anybody who's looking at Google intraday or using options to trade Google on an intraday basis, which is something that my father actually did a lot of, and I tried my hand at, but I think I didn't have enough patience, frankly, for it. So when you're looking at things on such an intraday level and you have supports and resistances that you can rely on, they can provide a lot of less wasted time, frankly, because you kind of just let things hang out and percolate, and then when they get to your level, you get ready to take action if you have a trigger. The other interesting thing about this chart versus the other two I've shown you is my use of projections to the upside. So many people think maybe that Gan's work is more about forecasting in time, and that when you're going into these open sky-high price areas where there's no past history, there's not a lot to do with price, but that's not true. Just like how, Larry, you might look at all of this and project 1618s or 1127s, I look at this and go back in history and take the key levels from the weekly and the monthly timeframes, as well as the most recent significant daily action. So the brown lines, and the brown projection is obviously longer term, and the whole green set of lines and projections is more of a daily focus. And now I have my game plan. So long as this early September low holds, these projections are out there for me. And if this market does pick back up, I don't have to go back and figure it out again. I already know where my projected resistance is. And of course,
listen,
yeah.
We're going to have to wind it up here because we're coming to the end, but we'll have some folks. We're going to post your details into the room today so people will take a look at it. And maybe we'll have you on as a guest in the near future, especially if some of your things work. And even if they don't work, we'll have you on as a guest. You did a great job, Hema. By the way, this was one of the better explanations of GAN that I've seen in a long time.
Well, thank you, Larry. I appreciate that.
You betcha. And thanks for joining us today. We'll be back, folks, for last minutes in just a few seconds.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at the New York Stock Exchange Index. As you can see, we are, still in a downtrend. We've had lower tops, lower bottoms in here. It still looks lower to me. I'm going to put the chart up from our good friend Shane Smolian, which he did really a nice job to take a look at this. 1 second here, you'll see that the transits are scheduled to be negative for the month of October, especially around October the 20th. If you remember, October the 19th, 1987 was Black Friday, so that'll be something to, that was Black Monday. But anyway, we'll get to see what's in here. Okay, our guest was Hima at Hima Ready. That's HIMAREDDY.com. And so it's very easy. You can find that through the TFNN site if you have an interest in GAN. She did a really good job, I thought. I really enjoyed it very, very much. Okay, but let's get back here. If you'll notice this transit chart that we have from Shane Smolian of wolftrader.net, Shane was very accurate about the rally coming into early October, which we did get. And now what we're looking for are these key spots as we come through the month here, especially between the 4th and the 7th. That'll be something very interesting to look at this week, because from Tuesday through Friday should be a down move. Then we get up early in the next week. So watch these transits, folks. These are cycles that have a really high probability of working. And this is combined with some of the work that he does with the Fed, quantitative easing stuff, which you cannot deny that stuff doesn't work, because it seems like every day at 10:30, if the market's down, in comes the Fed and starts to turn it around. So in about another half an hour, watch what's happening, because if we hold a bottom in here, it could be that the Fed is starting to put the pump in and put out the helicopter stuff with all the money, and we'll see if that's going to hold it. One other chart that I wanted to was from our good friend Arch Crawford, and this is from the Cleveland Federal Reserve, showing the stress that's in the market. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.